you make a compelling case for Bitcoin. You see it as, the ultimate asset, money. But I want to focus on your thoughts there, that we shouldn't get wrapped up in the day-to-day movement and price action because we missed a profound truth. What do you mean by that?
Well, the profound truth is this, which is that money, which is one of humanity's greatest and most enduring innovations, is going through another profound shift. Money has evolved over time from cowrie shells to precious metals to banknotes and bank balances. And now it's entering in this new phase. Money is becoming digital. And there are a few competitors out there, I guess, who are trying to stake their claim for the future of money, traditional entities like corporations and governments. But it's my view that there are at least 9 different reasons why Bitcoin has as strong a case to make as any as to why it should be the future of money. And that's why, I used to work in the traditional capital markets. I worked for a Canadian investment bank called Canaccord Genuity, and I quit my job in 2015 at the ripe old age of 29 to pursue a full-time career in this space with no real idea of what I was going to do. But I was convinced then, as I am now, that Bitcoin was not only the most important innovation in financial services or in technology, but that it represented potentially the future of money itself.
And you see it as an evolution of gold. Your article on American Consequences calls it almost the new gold, and you compare Bitcoin to gold. So let's talk about that, because when we are talking about a store of wealth, obviously, gold and Bitcoin both come up. And the argument is, well, look, gold has a 5,000-year track record. It's the ultimate safe haven. If I invest today, I could feel kind of good about where I'll be in 20, 30 years. Bitcoin has a 12-year history and a very volatile history at that. How can it be a store of value?
Yeah, well, it's a great point. So there are certain similarities between Bitcoin and gold, which I think is one of the reasons why we found a lot of success with investors who are used to looking at gold and gold companies. So the first thing is that Bitcoin has a limited supply. There are currently around 18.5 million Bitcoin. There will only ever be 21 million Bitcoin in circulation. Similar to gold, there's a certain amount of gold that exists in circulation, and there's only going to be so much that we're able to extract from the earth. So that's point number one. Point number two is that both of these entities are not controlled by corporations or governments. So there's no way to, basically manipulate the supply by printing more gold, and you can't print more Bitcoin either. So the fact that it is a monetary asset independent from government that offers a check on inflation and fiscal irresponsibility makes Bitcoin attractive in that respect. Neither Bitcoin nor gold have cash flows. You don't pay a dividend or clip a coupon from either of these assets. But in a low rate environment where the real risk is currency inflation, that's not really a big concern. And then the final thing, and this is probably the most important one, is that both Bitcoin and gold are increasingly seen as a store of value. Now that might seem like kind of a circular argument, but it's true. With gold, there's some demand for jewelry and demand for electrical components and so forth, but that's not the thing that drives the price of gold. The thing that drives the price of gold is the perception amongst companies, individuals, institutions, that it is a store of value. And so as perceptions begin to change around Bitcoin, as more and more companies and individuals begin to buy and store it for those reasons, the more robust that thesis becomes. But there's some ways in which Bitcoin, I think, is superior to gold. For one, it's much easier to store, much cheaper to store. It's much easier and cheaper to move. You can send hundreds of millions of dollars of Bitcoin between two people on opposite ends of the earth, and do so for a tiny fee or no fee if you're willing to wait a bit, and do so, in a few minutes or hours. To do that with gold would obviously be far more complex. Bitcoin can be infinitely divided into small increments, which is something you can't really say for gold, at least not as a payment method. Moving a tiny filament of gold is practically difficult. And I think with Bitcoin, there's future growth potential that gold doesn't have. I think gold will always be, an important store of value investment in a portfolio, but I think it's unlikely that gold becomes the global reserve currency or some kind of global payment network.
Could you see that happening with Bitcoin?
Well, I don't think it's a foregone conclusion, put it to you that way. The way that I see it, Bitcoin today is around $1 trillion and gold is around 10 trillion. So for me, opportunity number one for Bitcoin is to capture some of that market share and some of that mind share. Beyond that, and we're talking about a multi-decade, thesis playing out here, there is potential that Bitcoin becomes more deeply integrated into the financial system and does become a unit of account and a medium of exchange for a lot of people. People in Canada where I live, or in the United States where you live, are used to like a fairly well-functioning financial system. But in places in the world where that doesn't exist, Bitcoin usage is already highly penetrated. So in Nigeria, for example, a third of people in Nigeria use cryptocurrencies on a regular basis, not as a store of value and not as a investment where they hope to make money, but as a way to survive, as a way to make payments move value, and to perform daily financial functions. So there are billions of people in the world who live in similar circumstances, and so I can see Bitcoin catching on in those places as a new form of money, whereas in North America it's still very much a financial investment. So anyway, so to my mind, there are a number of other reasons why I think Bitcoin is a compelling investment right now, but it's similarities to gold and the ways in which it improves, I think are worth paying attention to. And I'll just finish on this regards to this question. You said gold has a 5,000 year track record, and it's true, it does. But so did the horse before the internal combustion engine was created and before automobiles hit the road. And we still ride horses today, and people still collect them, and we still bet on horse races, but they're really more of a novelty than something that's widely used. I'm not saying that's the way that gold is going, but paradigms do change. And when they do, these kinds of disruptions can occur.
Yeah, I mean, and we could talk about, we could debate gold versus Bitcoin forever. I guess another counter argument when it comes to holding physical gold, of course you can own paper gold, but the physical gold is actually holding it in your, and 1 ounce of gold is not that big. You can have easily 10 ounces of gold in your pocket and travel, not necessarily by plane, but you could transport that. The fear with Bitcoin is, I could lose my password or access. So there's always that counter argument of people want to actually hold or be able to touch their investment.
Yeah, I think that's absolutely true. You can touch gold. It's a physical commodity. And that's one thing that people like about it. But, I think for most investors, their portfolio is in a mix of things like gold, stocks, bonds, and so forth. Having a stock certificate, you can go to the, custodian that holds your share certs, and you can request a share cert so you can hold it. But really, that's an intangible asset. A financial asset like a stock or a bond is something that exists not in real matter, but exists in legal terms. What's interesting about Bitcoin is that it is actually extremely similar to gold. You can't really custody your own share certificates or your own bonds the way you may be used to in the old days, but you can custody your own Bitcoin, and that's something that appeals to a lot of people. So being able to, in the same way you can pick up 16 ounces of gold, which is what is that, $25,000 or $30,000 worth of value, you can similarly carry around the private key, which allows you to access Bitcoin on the Bitcoin network, in a small package. It could be on a piece of paper, it could be on a USB key. But you do raise an interesting point, which is that there is a risk for a lot of people who do self-custody of potentially misplacing the password, the private key, which allows them to access their Bitcoin. And if they lose it for good, then they may never be able to access it. And that's, I think, one of the reasons why products like the Bitcoin Trust, which you mentioned, but all the other listed products that exist have found success, which is that there is a demand for exposure to physical Bitcoin in the same way that there's demand for exposure to physical gold, which is why things like the Sprott Physical Gold Trust have found so much success, right?
Yeah.
People don't want exposure to rolling futures of gold. They want to know that the gold is sitting in a vault in the Mint or at the London Metals Exchange, and that they really can access it, right? The same is true for Bitcoin, and that's why I think physical Bitcoin vehicles have found a lot of success, because it marries these two different principles together. The idea that the thing that you own has a claim on physical Bitcoin, real Bitcoin, but with the convenience of having it in a listed vehicle.
Do you think we'll get to a point where the Bitcoin price will find a comfort zone and we won't see that volatility or major corrections, that it will settle between some sort of range at one point?
I'm not sure. And I don't think that volatility is inherently bad. And I think it's a mistake to look at something like gold and say that gold is volatile. When I was working at Canaccord in the capital markets, I was an institutional salesperson. We used to underwrite deals for gold mining
Right.
regularly. And the price of gold in the 2 or 3 years that we were in that cycle went from $1,700 to $1,200 over the course of a couple of years. Now in Bitcoin, a correction of what's that, 30%, that can occur in a week. So
Right.
that would be the difference. The difference is that the volatility happens over shorter time intervals, I suppose. But as I said, volatility is not inherently bad. In the 1970s, when Nixon basically closed the final gold window of convertibility from US dollars to gold at the Federal Reserve, the price of gold kind of went haywire because we were in this period of price discovery. We lost the peg to traditional currencies. And so people were trying to find out what the equilibrium price of gold was going to be. The measure of volatility in the 1970s, Daniela, was really high. It was up a lot, it was down a lot, but in the aggregate over that period of time, you would have been very smart to own gold because the price of gold increased many-fold. I think we're in a similar period now with Bitcoin where it could be volatile, but so far the volatility has trended really only in one.
So what I'm hearing from you, Alex, is all investors should own a percentage of their investments should be allocated to Bitcoin.
Yeah, my view basically is that if you're thinking of putting 5% in store of value investments, and that could include gold and other hard assets, that Bitcoin should 100% be one of those assets.
Okay. I guess my final thought, your thesis surrounds how Bitcoin is the future of money. How far away do you think we are from a global adoption of this? Is it 10 years out, 20 years out? I guess, what does the world look like in 2030 for you?
Yeah, for sure. Well, in the article that I wrote for American Consequences, and other work that I've done since and before that, I've tried to imagine what the world could look like in 2030. And I think it's different than the one we live in today. So right now, the US dollar still reigns supreme as the global reserve currency. And there's a lot of discussion of whether or not, China or, some other form of government-backed money will take its place. I think that's not likely to occur. I think that the idea of the US dollar as a global hegemon having control the way it does is a historical anomaly more than anything else. And we're probably going to go back to a bit of a messier, bit more fragmented monetary system where the US dollar, corporate currencies launched by banks and even big companies like Facebook, and what I would call community-based currencies like Bitcoin are all vying for control and vying for influence over mind share and over wallet share. And I think when it comes to Bitcoin, as long as there's government overreach, as long as there's monetary and fiscal irresponsibility, as long as there's corporate interference into people's privacy and their intimate lives, there's always going to be demand for another option. And that's as true now as it was in the past. And I think if anything, as those trends that I just described accelerate, Bitcoin's place in the world will become that much more important.